Um, yes. So without further ado, because I'm aware that a lot of us may have other things to do, I'd like to invite Efe, the area sales manager at our financials. Thank you very much for your time and thank you very much for doing this with us. Mr. Efe, please.
All right. Thank you very much, Deborah, for that wonderful introduction. I want to welcome everyone today for um, joining the meeting, and I want to appreciate everyone for taking our time to come today to join the meeting. Again, I understand, I know that a lot of people are working and obviously taking our time at all to come to this meeting is highly appreciated. Thank you so much. I want to also apologize again for starting a bit late. We scheduled this meeting for 12 o'clock this afternoon, but due to some technical hitch, we couldn't get the ball rolling on time. But in any case, we're here and I'm very excited to welcome everyone. Okay, as you know, my name is Efe Anthony Morogiwa. I'm an area sales manager for our financial. Our financial is Open Work Limited, and just to let you know that our financial is a UK financial services company that specializes in providing financial advice to people on financial protection. So basically, my job role is to show people how they can protect themselves, their family, their income in the event of any unforeseen circumstance, which could be an accident, sickness, or injury. So today I'm going to be talking through so many important topics that most of us find probably confusing to understand how it works and how it can benefit you and your family. So I'm going to be talking about investment and property, how to own a property in the UK, the processes. And again, I'm also going to be talking about insurance, protecting yourself and your family now and in the future. And I'm going to be talking as well about recruitment in the financial services industry, to be precise, in the insurance industry. So, but again, the housekeeping, I've just grabbed my cup of coffee. So if you need to quickly get a cup of tea or a coffee, you can quickly do that. And at least you're in your various houses or wherever you are, if you need to use the loo, you can at any point in time permit yourself to use the loo and come back quickly so that you don't miss any part of the meeting today. And again, I'm going to pop my number on the chat box so that in case you have any questions to ask me, if you don't want to ask me any question here, you can take my number and you know write to me privately. And also, I know that um, people don't want to ask personalized questions. So based on that fact, I'm just going to drop my telephone number. So if you need to speak to me now or in the future, I'm more than happy to help. And again, I also know that some of these services are very personalized. So based on that, you may have some issues that you want to share, and I'm happy to also um, receive your calls to share it. So I've dropped my number in the chat box. So if everyone on this platform just send me a message to say hello or hi, then I'll know that I mean you got my details. So if you need to ask questions in the future, we can um, take it from there. So I'm going to share my screen first. Let me share my screen. Okay, I think someone else is sharing. Um, Deborah, are you sharing your screen? Okay,
Yes, I was, but I've just stopped sharing
okay, all right.
so that
Thank
you
you
can
very
see.
much.
Yeah.
Yeah, so I'm going to share now. Well done. Okay, so I don't know if everyone can see my screen. I've started sharing now.
Yes, I can see it.
It's coming up. So you can see, I'm not very familiar with Zoom. Most of the time I use Microsoft Teams, so this is okay, but it's okay. So as you can see a family of four, and the company is OWL Open Work Limited, our financial. I'm just going to run down through with you the information about the company and what we do. So we provide greater protection for you and your family. Our financial is a UK-wide advice business that is focused on helping people secure the right level of protection cover. So we pride ourselves in delivering professional services, either face to face or remotely, just as we are, having this meeting now on Zoom. That's a remote meeting. And it will interest you to know that we believe in a valued, personalized advice. And again, all of our advisors are trained to a very high standard. That is why the quality of advice that we recommend to our client is exactly tailored to their needs and budgets. Again, we are regulated by the Financial Conduct Authority, the FCA, in the UK. So with you through life. Also, we provide a super combination of protection products that help you and your loved ones benefit from financial peace of mind. We also can help you if you need a mortgage. And again, if you need advice in terms of your building and content insurance, we are there to help you. And of course, if you own a business in the UK or you're a director of a company in the UK, we are more than happy to help you with a business and commercial insurance, which include public liability insurance, professional indemnity insurance, as well as employment liability insurance. Okay, so I'm going to start by talking about financial security. What does financial security mean? So I'm going to stop sharing this screen and I'm going to share another screen now. Um, Let me go to
Whilst Efe is trying to share his screen, I just want to use this medium to welcome every one of you to this one-to-one discussion on mortgage, insurance, recruitment with Efe. This event is hosted by the NSSPF, that's the Nigerian Student Society Presidential Forum. Um, it is a forum that has all the presidents of the Nigerian Student Society across universities in the United Kingdom. Um, and the aim is to bring Nigerians together to foster unity in our midst. Thank you very much for being here.
Thank you very much, Deborah, for that wonderful introduction again. And I want to thank you so much for taking our time to bring me on board to host me today and allow me to speak to members of your team. So I'm going to start with the principle of financial security. I'm sharing my screen now. I don't know if we all can see my screen that I'm sharing. If you can see my screen, please signify by maybe giving me a thumbs up, or you can unmute yourself to let me know that you're seeing my screen.
I can see your screen.
All right, thank you very much. We carry on because of time. Time is very important and precious in the UK. So the principle of financial security, what does that mean? So principle of financial security means that the principle of financial security means that income from your investments is equal to or more than your expenditure. So what does that mean? It means that if you are employed in a company and you earn salary, and the salary you earn is not more or equal to your expenditure, that means you're not financially secured. Again, financial security is a journey. What I mean by the fact that financial security is a journey is that it takes a long time for you to be financially secured. Take, for instance, if you're traveling to Manchester from London, it takes a while. It takes about 2 or 3 hours or even more, depending on how you drive. Now, getting to that journey might take some kind of challenge. And one of the challenge that you might face when getting into this journey is that there might be a breakdown of your car on the way. You might fall sick on the way, God forbid. An accident can happen on the way, and even the worst case, death can happen. So financial security is investing for your future, providing financial intelligence would also help in helping you to be financially secured. Therefore, if you have a long-term plan of wanting to own properties in the UK, you have to continue to plan, save, so that at the end of the financial period of time, you would have been able to earn a huge savings and be able to purchase property. Okay? Now, if you start to plan and want to achieve your long-term goals and objectives, what are the factors that you think will militate against you not being able to achieve or being able to continuously achieve your set goals and objectives? One is the fact that if you plan to buy a property, there's every chance that you might fall ill. In the process of saving, you might fall ill. And because you want to continue to save, you will need to protect yourself. There's every possibility that you might have an accident as you get along in life, and you still want to achieve your long-term goals. You need to protect yourself. Then again, there's every possibility that the worst will happen, which is death. Then again, because you have a long-term plan and you have family that you want to cater for, you still continue to have to plan. So that leads us to financial intelligence. Okay? So the principle of financial intelligence means that if you are employed or self-employed and you earn income of 100%, 10% should go for charity or your faith. Then 10% should go for yourself. You are the one working your money. You need to look after yourself. It's very important for your physical and mental health. You need to spend some money for yourself. It's very important. Then again, 35% should go for your savings or investments in the future. And what I always say to people is that if you can save more than 35%, the better. Okay? Then 65% of your income should go to your expenditure. Again, if you can manage your expenditure lower than 65%, that would give you some form of financial security. Then most importantly is the fact that you have to use 5% to protect your 100%. This is because should anything go wrong, you'll still be able to achieve your goals and objective of wanting to achieve, your plan of buying a property. I'll give you a story. I had a client who was very ill some time ago, and he had income protection, he had life insurance, and he also had critical illness cover policy. Now, this gentleman was very ill and he was terminally diagnosed of a life-threatening disease. So we actually was thinking that the worst will happen. So along the line, the guy was hospitalized for, I think, 20 days in the hospital. And before then, he was in and out of the hospital. So now, after he was discharged from the hospital after a while, he contacted me, and of course, he was diagnosed with a life-threatening disease, and he was able to successfully make a claim on his critical cover policy. Now, he got that benefit amount from his critical cover policy of up to the tune of £25,000. This gentleman had a long-term plan. What was his long-term plan? He wanted to purchase a property in the UK, but he had a challenge. The challenge was the fact that he didn't have the deposits to purchase the property. Now, when he got the benefit amount from the critical illness cover policy he used part of that money as a deposit to purchase the property that he has been so desired. He's been thinking of purchasing property a long time ago, but he didn't have the money. But that is to say, he was able to make prosperity even in adversity. So what I tell people is that once you protect yourself, you are protecting yourself by providing yourself financial security for the future. So that in case anything happens, then you are guaranteed that, your long-term goals and plan will still be achieved. That is when insurance comes in. So I see a lot of people talking about insurance by saying they don't believe in insurance. It works. In this part of the world, it works. And the way the system works is that you have a disclosure. The onus is on the client to ensure that they provide the information that is accurate and correct. This is because a situation whereby the information is not accurate and correct might lead to your payouts not being paid. So therefore, you are going to be giving yourself peace of mind by ensuring that you provide correct and accurate information as at the time of signing up a policy. So, in a nutshell, the point I'm making is that having to protect yourself now and against the future will bring about financial security. And applying the principle of financial intelligence will be able to make you achieve these long-term goals and objections. So that is for the principle of financial security and financial intelligence. So I'm going to stop sharing and talk about personal protection. Okay, I'm going to share another screen. Again, I've not seen anyone sending me a hi on the platform. So I've put my number in case you need to ask me a personalized question. You can contact me now or in the future, and I'm happy to speak to you about any queries at all. So I am going to carry on with the presentation. So I'm going to share my screen again. And Deborah, before I share my screen, could you carry on by...
Yes, absolutely.
Thank you.
Thank you very much, Ife. I mean, that was really, really packed. Some of the things that jumped at me is that or are that we have to spend money for ourselves. Like it is very, very important. Like a lot of us, especially Africans, but because I'm Nigerian, so let me just say Nigerians, we like, oh, let them know that I'm abroad. And so we just send money home, forgetting that we ourselves, that is doing all the work, we need to take care of ourselves. So that is very, very apt. Another thing that jumped at me is that we need to think about using 5% to protect our 100%. And that's very, very, very important because if you look at it, how much is 5% compared to 100%? Another thing is that we should make prosperity even in adversity, just like your clients, that the story of your clients that you've mentioned about how he was able to bounce back, even though he was ill. The illness did not deter him from the lifelong goal or lifetime goal that he's had. So he was able to bounce back, get his property, even though he was ill, he couldn't walk. And that's all because he has done what he's supposed to have done by using his 5% to protect his 100%. Thank you very much. Fantastic. I'm just hoping to learn so much more from your other presentation. Thank you. Over to you now.
Thank you very much, Deborah, for that wonderful summary of what I've just explained to the clients. I mean, to everyone here, sorry. Just to let you know, I'm going to be talking about personal protection, how it works, how it's going to benefit you, the exclusions, the features, and so on and so forth. So I'm going to start by saying that we at Our Financial, we provide what they call a super combination of protection product that will benefit you and your family, thereby giving you financial peace of mind. Again, I'm going to be talking about mortgage, how it works, how you can own properties in the UK with within a shortest possible time. And I'm also going to be talking about business and commercial insurance and how you can get your professional indemnity insurance as well as employment liability insurance. So firstly, I'm going to be talking about the income protection. So the income protection insurance pay out a regular tax-free monthly income if you're unable to work due to sickness, accident, or injury. So what that means is that if you experience loss of income from work as a result of sickness, accident, or injury, the income protection policy is there to help you. Now, instead of you to be worrying about how you pay your bills, put food on the table for yourself or your family, you rather focus on how you get well and get better as soon as possible. So it's very, very important that you have an income protection policy in place in the event of any unforeseen circumstance. Again, you are providing yourself with financial peace of mind and financial security. Whether you are employed or self-employed, it's important to have an income protection. If you are employed, of course, you know you have a sick pay period. In insurance, we call it deferred period. So that sick pay period is the time where your company will pay you. Assuming that you become unable to work longer than the time your company has to pay you, what are you going to do? The NHS is the biggest employer of labor in the UK, and the maximum deferred period you can get, the maximum sick pay period you can get from the NHS is 12 months. Now, supposing you are not able to work longer than 12 months, how are you going to maintain your lifestyle? That rent you are looking at, how are you going to pay it? How are you going to feed yourself? So it's very, very important that you have your income protected in the event of any unforeseen circumstance. Again, if you are self-employed, it's worse because as a self-employment person, you are working for yourself. If you are not able to work, how are you going to pay your business rates? How are you going to pay yourself? How are you going to put food on the table for your family or yourself? So it's worse as a self-employed person not to have an income protection policy in place. Because if the worst case happen, what are you going to do? So what I say to people is this. In the event you are unable to work due to sickness, accident, or injury, what will you do? Is it not high time you start thinking about having an income protection policy for yourself? You have to think about it. It's very important. All right? Then again, we have what they call life insurance. Oh my God. Life insurance, otherwise known as life assurance, helps to provide financial security for people who depend on you should you die. Death is inevitable. It's going to happen to all of us. We should not shy away from that. Again, I'm sure that in another 100 years, none of us will be here. So having a life insurance is not just giving you peace of mind, it's also protecting generation upon generation. I always say to people that if you have someone that depends on you financially, life insurance is a topic you cannot avoid because the benefit of having a life insurance is enormous. For example, the lump sum benefit amount can be used for your family's upkeep. Again, the sum assured can be used for your children's upkeep and welfare. Your spouse retirement plan can be used with your benefits from your life policy. You can even go into real estate investment with the benefit amount coming out from a life policy. Let's take, for instance, just imagine that you are a recipient of a life policy benefit amount to the tune of £500,000 from your parents or your grandparents. I'm just giving an instance. What do you think that money will do for you? It will go a long way in helping you getting a better life. So for me, life insurance is one of the best way to bring about generational wealth from one generation to the next. So it's very important that you have a life insurance in place. A lot of people have things like Netflix, they have Sky, they have a lot of direct debit from your bank account. The question I always ask people is this: which direct debit have you got that in times of crisis you can run to? If you cannot pay your Netflix today, Netflix will cut you off. That subscription will cease to exist because they don't care about you. If you have a protection policy in place, income protection, critical illness cover, or life insurance in place, and something happens, that direct debit that you've been paying all this while can come and rescue you in times of need. So let's think about having a protection in place that will benefit us and our family. Again, part of my job is to provide a personalized service. What do I mean? There are some insurance that you can never get online. And there's a type of insurance you can get through a financial advisor like myself. For example, we have what we call global treatment cover. It's an optional benefit on a life policy. You can never get that online if you decide to want to get an insurance online. So what global treatment means is that if you are diagnosed of a life-threatening disease like cancer, leukemia, bone marrow cancer like bone marrow transplants, things like that, and you need the service of a specialist doctor, and you've got global treatment cover policy option in your life insurance, you have the chance of being treated anywhere in the world. You have the chance of the opportunity of being treated anywhere in the world. If you are not being treated in the UK, they can take you to the best hospital anywhere in the world where you can be treated. Again, you don't need to pay for any medical expenses. With the global treatment cover, your medical expenses is paid up to date. And on top of that, you just need to take your bag and your clothes and straight to the airport, and you enter the flights. So they make provision for your medical treatments to the country of your choice. It could be Spain, it could be Bulgaria, it could be Nigeria, it could be Canada, it could be the US, anywhere of your choice where that medical treatment can be resolved. Again, you get £100 every day while you are hospitalized for that treatment. And you are entitled to come along with an adult. It could be your spouse, it could be a family member, free of charge. That family member will come along with you, and that family member will be provided with 3 to 5-star hotel for the duration of time while you undergo that treatment in the country of your choice. So having a life insurance with a global treatment cover is absolutely amazing because of the benefit that comes with it. Again, if you return back to the UK after the treatment, you still have up to £50,000 at your disposal so that you can continue to, have that treatment available to yourself. And again, it covers any member of your family who is, part of that policy from onset. So having a life insurance with a global treatment cover is not something you can get online. You have to get it from a financial advisor like myself. So it's important to have the right level of protection cover, and it's also very important that you understand how the benefit works. Okay? Then we also have what they call critical illness cover policy. So the critical illness insurance pay out a tax-free lump sum on the diagnosis of certain life-threatening disease such as heart attack, cancer, stroke, or any major organ transplants. So what that means is that if one is diagnosed of any life-threatening disease that I've just mentioned, you have the opportunity of getting a lump sum benefit amount from your critical illness cover policy. So you are buying peace of mind should anything happen. So it's very, very important to have a critical illness cover policy in place. Earlier, I mentioned a client who was diagnosed of a critical illness cover, diagnosed of critical illness, and he had a critical illness cover policy in place. And this client was able to use, the benefit amount from his critical illness policy to get to his next destination, which was, of course, to purchase a property. He didn't have the deposit. He has been thinking, how will I gather the money to be able to buy a house? But eventually, he was sick. We don't pray it happens, but it's what it is. He was sick, and the money that came out from the critical illness cover brought about transformation. He became a homeowner from the hospital. So I always say to people that in every adversity, there can be an opportunity and also a blessing. So it's very important to have, a critical illness cover policy in place. Okay. We also have what they call the accident protection policy. So this is designed to give you financial protection by providing you a cash lump sum if you were to suffer from specific accidental injury or accidental death. Oh my God. The reason why I highly recommend these policies for clients is based on the fact that it's a multi-protect. So multi means that it covers for more than one. So what that means is that it covers for accidental broken bones, accidental injury, total permanent disability, accidental death, as well as natural death, plus what they call GP 24/7 service. So what that means is that you have an unlimited access to be able to access a private doctor in the UK if you have that policy in place. Then again, it's very important to take this home. When it comes to medical situation, second opinion is very paramount and pertinent because recently, I don't know if anyone has seen that news. It happened that a doctor was diagnosing people wrongly. A doctor recently, I have the video. I'm going to send it to, if I've got everyone's number on the platform, I'm going to send it to everyone. A doctor in this part of the world, diagnose people wrongly that they've got cancer. To the extent some patients were going through chemotherapy and they never had cancer. Because of greed and personal self-aggrandizement, that doctor made $17 million from just diagnosing people wrongly. So second opinion, to me, is very important. So when it comes to any medical condition that you face, ensure that you speak to another doctor so that you have a second opinion as regard that medical condition. With this service, you have a second opinion. So, which gives you an opportunity of being assured that whatever your local GP has diagnosed is correct and accurate. Then again, your private prescription can be sent to you to your home address without you leaving your house. So with this MedLife Multi-Protect, you can get your private prescription sent to your home address. They will just process it on your behalf and send it to you by post. All right, we carry on because of time. Then we also have what they call home insurance. So home insurance provides you with peace of mind by protecting your home, your content, and personal possession from loss or damages. So what that means is that if you insure your personal belongings that are expensive, like your expensive wristwatches like Rolex, and it got damaged accidentally, or you go abroad and it got lost, with the home insurance, you can actually get it's either repaired. If it's not able to be repaired, it can be replaced as well. So it's important that you have home insurance if you have personal belongings that is worth the while to be insured. And again, if you are renting, it also helps you to protect your deposits. It's what they call deposit guarantee. So with your home insurance, you're not going to lose your money that you've deposited if you're renting a house. Then again, by law, you must have a building insurance before you can, get your mortgage across the line. So it's important that you understand that if you are buying a house, if there's no home insurance, if there's no building insurance readily available, no lender is going to offer you a mortgage. So it's important for you to understand that as well. Then again, if you become a landlord, you own properties and you're renting, you can also have what they call landlord insurance, which protects you against miscellaneous damage on your property. So you can get up to £2,500, landlord insurance in case you have a tenant that happens to be not doing the right thing in your property. And again, if you have major refurbishments in your property, you can also get the landlord insurance, and the time of where your property is being refurbished, you get some money paid to you as well. Okay, so that is for the personal protection insurance, which includes life, income protection, critical illness cover, home insurance, landlord insurance, as well as mortgages, which I'm going to talk about next on the next presentation. So in terms of the mortgage, I'm going to carry on straight away on that. So before I do that, I want us to digest what I've just talked about, how important it is, and how it can benefit you and your family. So on that note, I'm going to call on Deborah to, chip in one or two voice. If there's any question on the chat, we can answer that question later on and at the end of the section. I think that's best. So Deborah, it's up to you now. Thank you.
Yeah, wow. Thank you very much, Ife. Fantastic. Well, it's amazing that there are some codes we can get online, that's news to me. So it's amazing that you've mentioned that. So the best bet is maybe when someone is trying to get a quote, it's best to speak to an advisor so that you get the best. And I think they would also be able to tailor it to your needs, what I'm saying. Thank you very much. If it's something that actually occurred to me whilst you were presenting, is that it seemed to me that all of this insurance, they are kind of linked together. Correct me if I'm wrong, but it seemed like the income protection is kind of linked to the critical illness insurance. It's kind of linked to the accident one as well. So, if you can just also before, okay, maybe like you said, we can leave that to after your presentation, but that's just something that I've started thinking about to say that, okay, so what's the differences, or so if I get a critical illness insurance, does that cover me in case I get sick and I can't work anyways, or whether I get an income protection and because I'm sick. So what's like the distinct difference between these insurance policies? Another thing that if he mentioned is that we should try as much as possible to make sure that our peace of mind financially is paramount in our minds, like very, very paramount. We should do all that we can to secure our peace of mind, our financial security. And if you ask me, it's very, very important. Here in the UK that we are, it's unlike back home in Nigeria. Like I said earlier, I'm a Nigerian, so forgive me if I just keep referring to Nigeria. Back home, you pay your rent once, and then you know that for a year you are okay. But here, you have to pay it every month. So if there's a month that you for one thing or the other you did not work or you couldn't work, I don't know how you're going to survive this. Like yesterday, I was speaking with a friend, and we were talking, and I'm like, it's not easy here. Like when you get the funds, when you receive your income, even like by the time you know it, bills have gone, direct debit have taken almost everything out of it. So yeah, it's very it's a fantastic point that you've made, that we should make sure that we secure ourselves financially. If you're ready, are you ready for us now, Ife?
Yes, I'm pretty much ready.
Okay.
So I'm going to be going straight to the next topic, which is about investments and properties and mortgages as well. So a lot of people, contact me when it comes to purchasing a property in the UK. And what I say to them is that having to own a property in the UK is the one of the best options you can think about. This is because you are renting, you are paying someone else's mortgage. Why don't you find a way to get your own equity on your property and start earning money from it? Now, if you want to own a property in the UK, there are certain criterias that you have to put into consideration. Firstly, is the fact that you have to be employed or self-employed. Secondly, you have to have a deposit in place to be able to purchase a property. Then, if you are employed or self-employed, you need to demonstrate that you earn a certain amount of income that would help you purchase that property. And again, we use what they call a UK salary calculator, which, if uh, you contact me one-on-one and you need help when it comes to purchasing the property, I will be able to explain to you in details how you can actually benefit, on the process of getting a mortgage from the beginning to the end. Then again, if you are self-employed, we do what they call self-assessment SA 302, where we gather your income, your profits from your self-employment role, and we match it with your affordability. And of course, importantly, it's about getting your credit file right, because lenders will not want to lend to anyone who does not have good credit history. So it's very, very important that you have a good credit history and ensure that your credit is very, very okay. And one of the best way you can, help improve your chances of purchasing a property in the UK is to own a credit card. Having a credit card is very, very important because it will help the lenders to know that you have the capacity to borrow and you have the capacity to pay back. So what that means is that if you own a credit card, when you use it, at every point in time, you pay back. Again, some people set up a direct debit by paying the minimum payment for that credit card. I don't encourage that. If you can pay off your credit card every month, it will help you build your credit rating. And again, when it comes to your debit card does not give you any benefit whatsoever. You should not think of using your debit card at all for any transaction. For any financial transaction, the best financial tools to use is your credit card. Set up payment from your debit card, your current account, to your credit card and use it day in, day out, week in, week out, monthly, quarterly, and so on. You realize that your credit will go up. And when lender sees that, they will be able to, recognize that you are very disciplined and they'll be able to borrow you monies. This country, United Kingdom of Great Britain and Northern Ireland, is based on credit. If you want to be successful here, you have to have a good credit rating. You have to borrow. The richest people in this country, they borrow, they put back, they invest, they borrow, they put back, invest. So it is the best way you can build your wealth. Now, to be specific, in terms of buying a property, it's important that as an individual, you get your first residential mortgage where you live in your name. Okay? Once you buy a property where you live in your name, and that is your main residence, you have the opportunity of not paying stamp duty up to £425,000 purchase. However, the government of the UK might increase or introduce rather the stamp duty for first-time buyer up to 425,000 from April 2025. So anyone who is looking to purchase a property any moment from now and it's got all the prerequisites in purchasing the property should do that as soon as possible. Don't wait till next year, April. Otherwise, you have to be paying stamp duty as a first-time buyer. It was not the case, but taxes, the new government is trying to raise taxes so that they can continue to fund public services like schools, hospitals, roads, and so on and so forth. So that is for you to take home. Then again, buying a property in a limited liability company is the best way to invest in the UK. This is because with SPV, special purpose vehicle, with a limited liability company, you have what they call Section 24, whereby if you buy a property in a limited company, in your personal name, you have to pay taxes. But whereas if you buy it in a limited company, you avoid what they call Section 24 tax, which means that any monies coming from that property, would not be enough to pay your expenditure for your mortgage. Hence, it will not be taxed. So if you buy a property in your personal name, that is not a residential mortgage, you are renting it out, you have to pay tax from the beginning. So to avoid that, you have to buy the property on a limited company. Again, is to avoid capital gains tax. So if you buy a property, you are going to be avoiding capital gains tax. What does this mean? It means that if you buy a property on a limited company, any corporation tax on that property will be coming out from your company, and corporation tax is way, way lower. The government of the UK at this moment in time has not increased corporation tax, but rather they've increased what do you call it? Minimum wage of individuals. So the avoidance of capital gains tax is very, very important. And again, it will interest you to know that if you sell a property, that is below, and your profit is below 6,000, you don't need to pay capital gains tax. But if you sell a property and your profit is below £6,000, you must pay capital gains tax. So to avoid capital gains tax, you need to buy a property in a limited liability company, and that will help you save a lot of money. So these are many more information I will be giving to you if you need to contact me personally on the basis of, wanting to purchase a property. Again, do you know that also 4 people can come together and buy a property? 4 individuals. Instead of you to be paying someone else's rent, paying 600, 800, 1,000, you can save together and get a 10% deposit for a property of 100K. 10% of 100K. You can, 4 of you can put that money together and own a property together and live in that property. And you'll be paying very minimal. Don't also forget that in every 10 years, the value of property goes up. You are also making money for yourself. Equity is growing on that property. So it's very, very important that we come together as as friends to purchase a property together. This is the UK. Everything is legal. So no one is going to be thinking of pulling out because there's conveyancing on the property. A solicitor is involved. The bank is involved. I mean, the lenders are involved. Everything is black and white and it's straightforward. So investing with 1 or 2 persons in purchasing a property will help you save a lot of money and also help you make money in the future. I'm going to share a slide very quickly. Let me give you a scenario of how these things work.
Wow, thank you very much, Ife. I mean, it interests me to know that, just like you mentioned, four individuals can actually come together, save money together, get a property, and by so doing, they are kind of growing their equity. I mean, this is fantastic news, and I'm sure a lot of people are actually eager as to how they can go into this because me for one person, I'm very, very eager to know how this is possible. Just like I said, just before we started this section, I mentioned that if you look around, a lot of Asians, if I'm allowed to say this, they have properties. You will meet someone, and you'll be like, is it not the same work that we're doing? So this is the cheat code they are using. So a lot of them can actually come together, buy properties. Oh, this is fantastic news. Thank you very much for mentioning this, Ife. Um, Stephen, I can see your hand up, but if you don't mind, I also have seen your question in the chat. If you don't mind, we'll be taking questions shortly, but after this section. We'll be taking questions after this session. This is so that we, it allows for Ife to finish his speech, the discussion, and then everybody knows to ask questions, because questions bat questions. From your question, another person would want to ask further questions. So it's just so that we do it step by step. There'll be time for questions at the end of this section. Also, I can see that a lot of people want the recording to this particular event. That's fine, absolutely. If you don't mind, you can send me privately. If you don't want to drop it on the general chat, you can send your email address to me, and I'll be sharing the link to this recording after this section. Thank you very much. Over to you, Mr. Ife. Thank you.
Thank you very much, Deborah, for that wonderful summary. I want to share, if you don't mind, if you can stop sharing, I want to share a property scenario with you, with everyone here, to see how we can become homeowners very quickly. Okay. Can you see my screen? Can everyone see my screen?
Yes, we can see your screen.
So I just had a drawing. This is just a sketch on how possible we can become homeowners owning multiple properties within the shortest possible time. See, if you purchase a property, say you purchase a property for £100,000 and you have a 25,000 pounds deposit, and you are able to get 75,000 pounds loan to value. Say the bank is, or the lender is borrowing you that, yeah? And after purchasing this property, yeah, you now again use 20,000 pounds to refurbish that property. You have now spent 45,000 pounds on that property, right? The property is now, in good shape, standard, and you are now good to go. So in a year's time, yeah, that value of the property would have gone up to at least 160,000 pounds. Okay. Now, if you want to borrow another money again, okay, to buy your second property, yeah, because the value of the property has gone up to 160,000, again, you can do 75%, 75,000 pounds loan to value, which is 75% from the current value of the property. So if you take your calculator now, you see that 75% of 75,000 pounds of 160,000 is 120,000 pounds. So that means you've made 120,000 from that property, yeah, and your 45,000 from that property, from 120,000, if you take 45,000 from it, you now have, if you press your calculator, let's do that. I want us to do that together. Are we all together? So the new value of the property now, after you have published it, is now 160. Yeah. So again, you now get 75,000 loan to value, which is minus 75,000. Then, if you deduct that, you now have £120,000 value of the property. So when you take that out of the money you have invested, you now have 45,000 available to you. So that 45,000 available to you, you cannot use it again for another property. You continue this process for the next property, and after 1 year, that property will go up in terms of value. Then you get another remortgage on that property. Say you still get loan to value up to £75,000. Then again, you go for the third one. You've made profit for this first one. You made profit for the second one. That's how you get property for up to 10 properties in a period of 10 years, if possible. I don't know if this makes sense to anyone.
Wow. Well, I think it will do everyone good if you can go over again, just this particular drawing, this
Okay,
particular scenario. I think it will do everyone
if you
good.
can grab a pen and a paper,
Yes,
let
so
me
that
say
we,
this.
we see in total, because how
Yeah.
is it possible to have 9 to 10 houses or properties within 10
Within
years?
a 10-year period, yes, it's possible. It's very, very possible. Because every year the value of property goes up. And don't forget that you are investing on properties that are below the market rate, and you are spending a bit of money to refurbish that property, then refinance that property, and buy another property from the refinance that you've got from that property. So again, say you buy a property for £100,000. Yeah? Are you with me?
Yes, I believe so. Yeah.
And you have a deposit of £25,000.
Okay.
So you are getting loan to value. What the lender is going to be borrowing you is 75,000. That's not your money. That's the money they
Yeah,
borrowed you.
that's
Now,
all.
now you now use another 20,000 to refurbish that property you've just bought 100,000. So 20,000 for your refurbishment plus your 25,000 that you have put as deposits. That's how much?
That's 45,000.
That's 45,000. Okay. Now, the value of that property after we have refurbished it, say in a year's time, the value of that property is now 160,000.
Okay.
Yeah. So now, if that value is 160,000, I'm using my calculator so that now the value of the property is 60,000, and when you refinance it, you will get 120,000. Okay. Say you refinance it, you get 120,000. Now, inside that 120,000, you pay back the 75,000 you borrowed. The 75,000 on top, loan to value. So when you pay back the 75,000 you borrowed, you now have your 45,000. So that 45,000 is now your profits. Don't forget that first house, you didn't sell it. That first house is also going to be giving you equity. That first house is buy to let. That first house, the tenant is there. That first house is paying itself. You don't need to do anything. You don't take the house to the hospital. The house don't have any treatment. The house is just there on its own and is still generating money. So that 45,000 that you get after you refurbish the house in a year's time, after you've refinanced, the property, you will now use that 45,000 to go to the next property. So again, if you are buying another property for 100,000, you already have 45,000. So your loan to value is 75,000. So you just repeat it. Are you with me? You repeat the process.
Yeah.
Before you know it, you already have 3, 4, 5 properties. Just imagine 4 people coming together, yeah, contributing the 25% deposit, the £25,000 deposit. Just imagine that they now own a property. They are not even living there. Say in 2 or 3 or 4 or 5 years time, they want to remortgage that property. Do you know how much that their 25,000 they put together as a team would have generated? It would have generated more, well over maybe times 2 of what they deposited together. Whereas if an individual who is renting a property, paying 700 or 800, you are paying somebody else's mortgage. You are not getting any equity. You're not getting any benefit from that. So why don't we all think to say, look, let four of us come together and buy a house, say, for example, in Coventry for £100,000. I did a mortgage for a client recently. They bought a house, 189,000 in Coventry. And when I visited Coventry, when I saw the house, I was amazed. The guy used £15,000 to refurbish the house. Now, it's a 5-bedroom house. He bought it for 189. He's a single man. He lives in one of the rooms. He rented the rooms out, the other rooms out. The lowest rent for one of the room is 600. He's living in one. He rented 4 out. What do you think that guy is doing? You think that guy will be thinking of anything that has to do with mortgage? No. All the other tenants living in that property are paying his mortgage. And on top of that, he's making supernormal profits from that investment. So it's very, very important that we start thinking outside the box on how we can invest together as a community to bring financial prosperity and security to ourselves and our loved ones. Again, how does insurance come in this aspect? If you are not able to work and you have a long-term plan of purchasing a property, you have an insurance in place, you'll still be getting income if you experience loss of income from work, and you still continue to save. So you are smart enough to have insurance in place in the event of any unforeseen circumstance, because you have a long-term goal to want to achieve financial prosperity. That is why they go together in terms of investment. Is that clear? Are we happy to proceed?
Yes, yes.
So another thing I will talk about, lastly, is the recruitment. And before I go into the recruitment, I want to say this very importantly. If you have a life insurance that is not placed in trust, you risk losing your sum assured. So anyone here in this platform that has a life insurance and you are not sure that that policy is placed in trust, please give me a call. It's very important. Because if your policy is not placed in trust, you face a chance of losing your sum assured. And the reason why it's very, very important to place your policy in trust is due to the fact that it ensures that the money goes to the right person, as you've stated in your policy documentation. And again, it avoids you going through the process of probate courts. So probate court process can take 2, 3, 4, 5, or even more than. So why do you want to put your family in that kind of jeopardy? So it's important that you have your policy placed in trust. Again, it also helps you to avoid up to 40% inheritance tax from the government. This country is built on tax. And finding a way to avoid tax is legal, provided you are doing it the right way. Like buying a property on a limited company. It's legal. It is legal because you're going to be paying corporation tax, but a very minimal amount as compared to buying a property in your personal name. You're going to pay from your nose, pay so much. You get me? So it's important that we understand that any policy that we have should be placed in trust. Even our properties should be placed in an element of trust in the event of any unforeseen circumstance. Okay? So lastly, I'm going to be talking about recruitment. So I would allow Deborah to come in before I talk about the recruitment. Thank you.
Yes, thank you very, very much, Mr. Ife. I mean, this is amazing. All this that you've mentioned, I'm sure that for some of us here, this is new to us, and we are eager to learn as much as we can so that we can put all of this into practice. We have a couple of questions, and I think that with your permission, sir, that we talk about recruitment after the session for questions, if that's fine by you. If that's
Okay.
okay, sir.
Yeah, okay. I will just be brief with so that I know I've finished all the topics we're discussing today.
Okay,
So we'll just be brief, very brief with regards to the recruitment, just to and talk about it very briefly. And we'll
okay.
carry on straight away to the question so that we can call it today. Time is of the essence. So
Yes, okay, okay.
in terms of recruitment, I just want to give you this good news. My company is expanding, so we are at the moment recruiting. So anyone that is interested in wanting to work in the financial services industry, whether you have experience or not, you're going to be trained for 4 weeks. It's a rigorous training, and you will have the opportunity of joining us if you have uh, skills in sales and marketing, in operations, in admin. It's an advantage as well. And again, just to let you know, we are very strict when it comes to your records, especially your borrowing records. So we go through your credit file. If you've got CCJ, default is hard, except you've had it for a while and it's spent. What I mean by spent is no longer in your credit file. And again, even though you have it and it's showing that it's satisfied and it's no longer there as well, then of course we can consider you for a role at our financial. So anyone who is interested in wanting to work and earn, income. I know a lot of people do care work. That is also an element of our job because it's similar. We care about people, providing personalized service for them, providing life income insurance, critical illness cover, home insurance, private medical insurance, commercial insurance is also a way to care for people's life, their family, and their business as well. So feel free to reach out to me if you're interested in getting employment from us. I'm more than happy to help with regards to that. So again, my contact number is there. You can send me, can send me a message to say hello or hi and drop your name as well. And if you have any clarification, any anything you're not sure about, feel free to contact me. I'm more than happy to help. Okay, that's it for now.
Wow, fantastic. I mean, I'm sure a lot of persons are very happy that they attended this particular session. This is a section that, has the cake, the icing, everything. It comes with it. So for people that are looking for employment in one way or the other, just to ask, Ife, um, do you do part-time too? So if I want to work with your organization part-time, can I apply as well?
Yes, we do part-time, but however, we recommend full-time, and every application is based on case by case. So, but in any case, we do part-time. Yeah,
Okay, fantastic. Thank you very much. That's cleared it up for me. I think we should just dive straight into
yeah. The questions and
the questions, yeah, because of our time. Um, there's a pending question earlier, which I asked that what's the difference between the income protection policy, the critical illness, the mortgage, because if you ask me, they are kind of linked. So for example, I know that for mortgage, sometimes they tell you that, oh, you should get a life insurance just in case something happens, the other person is not left to take care of the mortgage. So when you get the life insurance, they just pay out that sum for the mortgage. So is this different from the normal life assurance? You understand what I mean? So if you can just throw more light to this, that would be great. Thank you very much.
thank you, Deborah. I'm so grateful for that question. Thank you so much for the very, very beautiful question. So just to answer your question directly, there's a huge difference between mortgage protection, life insurance, critical illness cover, and income protection. I'll tell you now. With the critical illness, let me start with the income protection. So the income protection policy pay out a monthly tax-free income if you are unable to work. Monthly tax-free income. So which means that you don't pay taxes on any income that you earn if you're unable to work. All right? And it's monthly. Then the critical illness cover pay a lump sum benefit amount from your sum assured. So which means that if you take up a critical illness cover policy today, for example, and the sum assured is £50,000, for instance, and if you're diagnosed of any life-threatening disease, you will get that lump sum benefit amount paid to you at a go. And once that is paid to you as a go, that policy will cease to exist. Unlike the income protection policy that pays you monthly tax-free income. Okay? You get one monthly, you get one lump sum benefit. Again, with the income protection, it is expected that you would still go back to work. Although it covers you from now to when you retire, but after a while, it's expected that you still go back to work because they expect you to, after a while, get back to work and not just be on the income protection policy benefit from now to retire, except it is obviously obvious and clearly clear that you cannot go back to work, which again is assessed on a case-by-case basis. Then for the mortgage protection, if you own a property, it's important for you to have a mortgage protection. This is because if you have that mortgage insurance, should anything go wrong, should anything happen, either critical illness or death, the outstanding balance on your mortgage will be paid off. So anyone that has a huge investment, like owning a property, and doesn't have a mortgage protection, I shake my head and I'll be very surprised that they don't have a mortgage protection, because you spend so much money to deposit on a property, you spend so much money to renovate that property, and you pay monthly repayment or interest only, as the case may be, and you don't have insurance to protect your mortgage, not your building now, your mortgage. To me, that is unreasonable. So it's very, very important that if you own a property, you should have a mortgage protection. Again, there's a new rule with regards to life insurance. If you want to purchase a property in future, it's important to have a life insurance now, because the lenders will see that you already have a life insurance in place. So having a life insurance in place will give the lenders confidence that should anything happen, at least their loan they've lent you would not go under the drain. So they know that at least the benefit amount from the life insurance you have will be used to pay or offset the mortgage. So I encourage people as much as possible to have a life insurance in place a year or two before they purchase a property. So that gives you, kind of a confidence in the eyes of lenders. Then one thing I need to talk about importantly is about trust. Although I mentioned trust earlier, just to let you know, there are different types of trusts, because for a mortgage, the trust is different, and for a life policy, the trust is different. For a life policy, you should have either a discretionary trust or an absolute trust. What do I mean? A discretionary trust is a trust that you can amend. What does that mean? It means that if you set up a life policy and for whatever reason you want to change whoever you have put as trustee in the future, you can do that with a discretionary trust. Say, for example, now, husband and wife has a life insurance and one of them passed away, for instance, and one of them is a trustee to the policy. Because that person has passed away, you need to use a discretionary trust to change the trustee to that policy to someone that is alive. Again, you can put someone who you love, family member, on a policy, and suddenly maybe you are no longer getting along, or if it's husband and wife, maybe they are no longer together. We don't pray it happens. You can change that and put another person as a trustee to that policy. Then again, you have the absolute trust, which I don't recommend to any of my clients. So absolute trust means that if you put someone as a trustee to your policy, you can't amend it. You can't change it any longer, regardless of the circumstance. So it's important to understand. Then we also have survivorship trusts. That is for a mortgage. So if you own a property with like a joint mortgage, they are both as severely liable to the property. So if they both own it, they need to have a mortgage protection that is based on survivorship trust. What that means is that if any of the party passes away, the one that is alive, has survived, the surviving partner would benefit the benefit amount from the mortgage protection. So I just wanted to make that clear. Okay.
Yes, thank you very much. Thank you for answering that question. Fantastic. We have a question from Rita. Rita has her hand raised up. Pardon me. Rita, if you can go ahead now.
Hi, good afternoon, everyone. Okay, I'm really happy I joined this meeting today because someone who thinks very far, even though they say life is not certain. So I was really happy when he talked about the life insurance thing because I actually subscribed to a life insurance middle of this year. They sent me a lot of forms to fill up, but for some reason I haven't filled up anyone, and they were just debiting my monthly payments. So, my first question is, how can I get involved with a trust, or how can I implement a trust in my life insurance? That's one. And then secondly, for someone who is on a skill visa, like this health and care visa, and wants to do a lot of things like get a business, maybe this kind of or this kind of arrangement of coming up with 3 to 4 persons to open another, like get like 2 or 3 companies, let me say 2 in a max. Is the person violating the UK law? I just want to know all this information. Thank you.
Thank you very much, Rita. That's a good one. Although I'm not an immigration lawyer, but I can tell you for free that I'm very vast when it comes to immigration. I've been in the UK for almost 18 years, so I know when it's right and when it's wrong to a very large extent. Okay, now I'll answer your first question in terms of the trust. Once the policy is set up, there's usually a column that asks if the policy should be placed in trust or not in your application form. Maybe you should go through the document to see if it's placed in trust, and if it's not, what you can possibly do is to either speak to the person that set up the policy for you, or I am happy with no obligation whatsoever. I'm happy to help put your policy in trust. I can do that because I have the license to be able to help people to put their policy in trust. So if you
Thank
need
you.
any help with regards to that, you can get my number and give me a call. I will be able to help you put the policy in trust straight away. Okay? But it's
Wow,
very
wow.
important.
So is it only Rita you want to
Thank
help?
you.
So it's important to put the policy in trust. Then
Now I'm
answering
jealous
your-
of Rita. Oh. Uh, wow,
so
thank you very
you
much.
are with me already. So I mean, all right. Then answering your second question, yeah, in terms of your skilled visa, I think it is restricted on the basis of the work you can do, except for the dependent who has no restriction. So I understand and I know clearly that if you are on a skilled visa, like the care visa they call it, you can only work for one employer, and you can work 20 hours for another employer as well, but it has to be in the line of your skills, not something else. But your dependent has no limits on the kind of job they can do. They are not restricted at all on the kind of job they can actually.
So my question is, like, I just recently registered a business name that I want to do some, maybe just say buy-to-buy sales, like customer-to-customer sales or minor items, am I going against the policy?
I mean, are you going against the law?
Yes.
Okay, well, I will be very sincere with you. With the kind of visa you have, you are honestly not allowed to do a business because it stated clearly your role. However, if you've got a partner who depend on you, you can set up the business in their name. If you got any close family friend, you can set up the business as well in their name, and um, you can from there manage the business. Again, if in future you change your immigration status, then you can fully continue your business. Or if you get your indefinite leave to remain, then you are not restricted. So I don't want a situation whereby you have issues in you're setting up a business they're not supposed to. But when it comes to property purchase, yes, you can. You can own a property as a limited company or as a residential mortgage. You know, that is pretty much allowed. Yeah,
Thank you.
yeah.
Yeah, thank you very much thank you very much, Rita, for asking the question, and Ife, thank you for answering the question. I'll just quickly go over to the chat. We have a couple of questions. Some were sent directly to me, some to everyone, but I have one from Stephen. Stephen says, are there age restrictions for the various insurance policies? So probably Stephen is thinking about his children, his wife, or even himself. So are there age restrictions to um being a policy holder for any of these insurance policies?
Thank you, Stephen. Thank you, Stephen, for that question. Just to let you know, you can get a life insurance up to 89 years if it's a termed policy, and you can also get a whole of life policy from age 50 to death. So basically, we can say there's no restriction in terms of the age, and you can have a life insurance for yourself, your family, and your children that will cover everyone at the same time. So you can have a family cover, and you can have an individual protection cover as well. I don't know if that answers the question.
Yeah, but maybe also, so can I insure my baby, like my day-old baby, for example, now? That's
Very,
possible, yes?
very good question. Yes, you can insure your baby from 23 weeks pregnancy, from
Oh,
23 weeks pregnancy
wow. Okay.
till the child is 23 years old. So yes, indeed, you can insure your child from 23 weeks old till 23 years old. Then from there, they can, take up the insurance themselves. Again, we have a standalone policy for child only. So that standalone policy, let me quickly just bring it out from a slide.
Okay. Whilst if he's bringing up the slides, I'll just stop sharing then. Do you want
Yeah,
to share the slide?
I'm gonna definitely share it. Yeah.
Okay, let me stop sharing so that I can share. So while he's trying to bring up the slide, just to quickly inform everyone that next month we would be discussing the legal aspects of property business. So we enjoy everyone to also be part of that event. So it will talk about the legal aspects of owning property. This current event is a one-to-one discussion about unlocking financial security with Ife. So it's a one-on-one discussion about insurance, mortgage, financial security, and recruitment with Ife. But next month, we'll be having the legal aspects of property business. Please join us as well. Thank you very much. Efe, if you're ready.
Yes, I'm ready. Thank you very much, Madam Deborah, for that updates with regards to the next meeting. So we have a standalone policy. It's called Child Shield. So it's been designed to protect children from birth up to the age of 23. And it's a standalone product that can complement existing products or policies, or can be taken out on its own. And because it's unique, it can provide protection on no other policy as it is. So it's a standalone policy. And again, it is simple and very effective for your children. And in case the unexpected happen, like sickness, accidents, or injury, the child will be covered. So now it comes in two aspects. One is Child Shield Standard, and we also have the Child Shield Plus. Again, our services is personalized. So everybody's personal circumstance is different, you know. So we do it in such a way that it is tailored and tied to your needs and budgets. So this policy covers for things like minor broken bones. You can get up to £100 per broken bones for the standard, and you get £200 for the shield plus. Then we also have what they call major broken bones. You can get up to £300 for each broken bones for a child. Say, for example, a child experienced ankle broken bones, shoulder broken bones, hips broken bones, and so on. Each is £300 per broken bones. So if it's three broken bones, it's 300 times 3, which is 900 that will be paid to the parent of that child. Then again, we have what they call hospital stay. So if you are hospitalized as a result of sickness or accident, you get each day you get £100. Sorry, each day you get £50 for the standard, and you get £100 for the Child Shield Plus. Then again, God forbid, a child is in intensive care. They are admitted in intensive care and they stay there, for 3 months, 5 months. There's no limits. They will be paid £150 each day. And if it's the Child Shield Plus, they will be paying £300 each day. So it also covers for bacterial meningitis. It covers for type 1 diabetes. It covers for burns. It covers for paralysis. It covers for cancer as well as brain tumor. So with the child standalone policy, the standard one, for those illness I've just mentioned, bacterial meningitis, diabetes, burns, paralysis, and cancer, you can get up to £5,000 for the standard, and for the Child Shield Plus, you can get up to £10,000. So again, depends on your personal circumstance, and also depends on what you're looking at in terms of the what do you call it? The insurance you want to have for yourself and your children.
Yeah, thank you very
Answer the
much
question. Yeah.
for elaborating on this. I mean, I like the fact that you usually would say that we don't pray for it, but I mean, life is filled with uncertainty, so it's better, like you advise, to have that peace of mind, to have the assurance that just in case something happens, of course, we don't pray that it happens, but just in case, there's that percentage, certainty or uncertainty that life will happen. Thank you very much. So I'll just quickly move to the next question. The next question is from okay, I think we've answered that. It's just on how to place an existing life insurance on trust, which you've answered. Then another question is from Ahabo, and he's asking if you can explain refinancing again. And I assume that this is from that drawing, that you made. You mentioned refinancing, and I think Ahabo, and I think a lot of other people too, would like to know what it means to refinance. You explained, after you put your deposit of 25K, the bank loans you 75K, you do some repairs of 20K, and after that you refinance. So he wants to know what does it mean to refinance and how does this happen, because after that refinance, immediately you said refinance like this, the next thing we saw was that after refinancing, now the value of the property has gone up, all of this. So if you can please quickly explain that would be great. Thank you very much.
Thank you very much for that question. Nabo, sorry if I mutilate your name. I apologize for that. It's called BRRR. You buy, you refurbish, you refinance, and you rent. Again, you buy, you refurbish, you refinance, and you rent. So it's a form of investment where you get a property, say you buy a property for £100,000. Once you buy the property for £100,000, you get £75,000 loan to value. That's the borrowing from the bank. Now, you've deposited £25,000 on that property. So what you now owe the bank is £75,000. All right? You now use £20,000 to refurbish that property. So altogether is now £45,000. Are you with me?
Mhm.
So now you spend £45,000 on that property, but that property is now taking a new shape, new look, and new value. Okay? You go back to the lender and say, come and take a look at my property. I want you to evaluate it for me and tell me how much it will cost. So the lender comes to your property and say, oh, this property has now improved. The value now is 160K. Now you now tell the lender, now that my property is 160K, I want to refinance. I want to take out money for the advance from that property. So you now take out you can take out up to 75% of your loan to value. So when you take out that 75% of your loan to value, yeah, you will now pay back for the first property. You owe them 75,000. Now your property has gone to 160. Once you refinance that property, you pay back the outstanding balance on that first property, and you now have 120 available to you. So that money available to you, you use it again as a deposit on another property, and by the time you do your deposit for a new property, you will now have 45,000 coming to you as your profit. So if you want to continue in that line, you cannot use that new benefit amount you have made from the investment. You can use it for a new property. So you do that on and on and on and on. Before you know it, you own properties here and there. However, practically, it is challenging. For example, if you are refurbishing a property, if you don't have the right workers in that property, it becomes an issue. The time they will take to refurbish that property, they might tell you 3 months. It will take them 6 months. So those are the little challenges you face behind. However, but if you have the right skilled workers that are there to help you, that's when we come in, because we are established in the market and we know people who can help you refurbish your property within a period of time, and you get your property quickly refinanced as quick as possible. So again, every individual's circumstance is different. So we provide a personalized service. So if you need any further detailed information about how these things work practically, you've got my number, you got my email. You can reach out to me. We'll have a meeting one-on-one. I'll look at your personal situation, and we'll take it from there. What I encourage for our community, what I want to continue to encourage our community is us coming together. 2, 3, 4 persons can come together and invest and buy a property on limited company, on SPV, special purpose vehicle, where you can invest and grow your income. Don't pay somebody else's mortgage. Don't.
Amazing.
Yeah.
Amazing. Thank you very much for that elaborated explanation. We have another question from Taiwo. Taiwo wants to know if there is any policy that helps to reduce taxes in the UK. So if there's maybe like any insurance policy that when I'm a policy holder, then my tax automatically reduce the tax I pay on my income.
Okay. I think we have talked about it just in the course of my conversation. So, like your income protection policy, for example, is a tax-free monthly income. So, if you are not able to work, you will be able to get that income protection continuously from now till when you retire, and there's no tax for that as well. Then again, to avoid tax is also to buy property in a limited company. So as I said, buying the property in a limited company will help reduce your corporation tax as against buying the property on your personal name, because you also get what they call a Section 24 tax free. What that means is that you will not be paying, you will pay more tax if you buy your property on your personal name from day one. As far as that property, you don't reside in that property, you start paying tax from day one. But if you buy that property on a limited company, the Section 24 would come in and you don't need to pay tax. Then again, capital gains tax is also avoided. A lot of people realistically don't know that they can avoid capital gains tax if they buy a property in a limited company. So those are the ways where you can, reduce your tax as much as possible. Thank you.
Okay, thank you very much for explaining that. So that would mean that if apart from the income protection, if in my day-to-day work, on my salary, there's actually no policy I can be on that would make or that would give me a tax reduction on my salary if I'm able-bodied. You know what I mean?
Yeah.
Okay.
I completely understand what you mean. This
Yeah.
country is built on tax, and taxes are used for things like social services, hospitals, schools, and roads, and so on and so forth. So your income tax is managed by Department for Works and Pension. And again, the more you earn, the more you are taxed. That's how the system works. It's like pay as you earn. So the way you can avoid or that kind of situation is not to work so much, because the more you work, the more you'll be taxed, really. That is why some people just want to earn below a certain amount because they don't want to tax more. So, for example, if I go into my UK tax calculator, someone that is earning, I'll just give you a classical example. Someone that is earning, say you are earning 35,000 per annum. Yeah, that's 2,916. So if I put that in UK tax calculator, 2,916. So the take home is 2,318 for someone earning 35,000 per annum. So that take home every month will be 2,318. Then let's say someone that is earning 40,000 per annum. So their take home now would be their take home now will be 2,601. You see, the higher you earn, the higher your taxes. Again, the advantage of earning more will be at the point of purchasing a property. So the more you earn, the better for you when it comes to purchasing a property in the UK. So don't look at it from the perspective of tax avoidance or tax reduction, as it were, but look at it from the progressive point of view that you want to purchase property in the future. The higher you earn, the better for you in terms of the quality and the capacity of the property you can purchase. Okay?
Yeah. Thank you very much. And that would lead me to my next question from Ijoma. She says, how much should I earn annually to enable me become eligible to apply for a mortgage?
Oh, very good question. Absolutely amazing. Ijoma, thank you so much for that question. There is no particular amount that you need to be earning to be able to purchase a property. However, you would need to first and foremost put into consideration the value of that property, and you will need to have a deposit available as well. Let me give you a clearer picture of what I mean. Let's say you want to buy a property of 200,000 pounds. All right. John, are you with me?
Yes, I'm sure she is.
Okay. Let's say you want to purchase a
Yes, I
property.
can hear you. Yes, I can hear you.
Thank you very much. I want you to listen to this
Okay.
attentively here.
All right.
Let's say you want to purchase a property of 200,000 pounds. Yeah.
Yeah. Yeah.
And you have a deposit of 10%. So 10% is 20K. Okay.
Mm-hmm. Yeah.
So now the bank will be ready to borrow you, or loan to value on that kind of property will be 180,000. All right.
Yeah.
So for that kind of property, if you have 10% and the bank is willing to loan you, your loan to value is 180,000, that means you need to be earning 40,000 per annum to be able to
Oh,
purchase
yeah.
a property of 200,000 pounds. So that
Okay.
40,000 per annum, so that means your take home should be around 2,600 every month to
Okay.
be able to purchase a property of 200,000 pounds.
Okay.
So if you work
Okay.
in the care industry, I'm pretty
Yeah.
sure you can earn 2,600 every month.
Okay.
I'm sure you can earn that.
It all depends on when you say care, it all depends on, the job role, nurses, doctor. So if you have someone who is a healthcare assistant,
Yeah.
obviously you may not be able to earn up to that 40,000 per annum
It depends.
practically.
I also think it depends on the shift. I know a lot of people that do shift to shift. If you have a target of wanting to, we don't encourage people to work and work and work, because recently I've heard sad stories about people working, especially people that just came to the UK, working and working and working, and they even get
Yeah,
uh,
but the thing is, I'm sorry, but the
yeah,
thing is, if you have a pay slip and you have, for example, what's your normal minus the fact that you have to work extra, which is like overtime or picking extra
yeah,
shifts, that one is not, your contracted hours. So if you have a contracted hours of 37.5, and then you earn probably your pay slip annually, what you earn is, let me just say, using the NHS pay band is maybe 24,000. That's what you earn per year for a HCA, for probably a HCA, band 3 HCA, probably what
yeah.
you earn in 24,000 annually. And then you're doing full time apparently, but you do not pick extra hours, for example.
Okay,
Because
okay.
the extra hours is not part of your contract. It's at your discretion. It's dependent on you. It's not contracted. You know what I mean? So
Yeah, I
if
get
you are
what you mean.
sticking to your contracted hours of 37.5 and then you're earning annually 24,500, so to say, you know, in that case, how do you marry it with a situation of someone who earns 24,500 annually and still picks extra shift, because the extra shift is not captured in your contract? I don't know if that
Okay.
makes
So,
sense.
yeah, I know, I completely understand what you mean. Firstly,
Yeah, yeah,
I appreciate your analysis, but just to also let you know, some lenders uh,
yeah.
provide further incentives to NHS workers. They get things like 5% discount
Okay.
for purchasing property. They
Yeah.
also can also get even 5% deposits as well, because you're NHS skilled worker. Then
Mm-hmm.
again, even though you are contracted to have 37 hours, you know, uh,
Mm.
as far as you can demonstrate that you are earning that extra hours
Okay.
in your income that
Yeah.
comes from
Yeah.
your payroll or your bank statements,
Yeah.
then that money is calculated as an income that that comes to you as well. So it is calculated. Then, of course, importantly
Mm.
is if you are a couple, yeah,
Yeah.
say both of you are earning 24K, then
Mm-hmm.
I mean that is way over purchasing a property of 200,000 pounds. Then again,
Okay.
if you want to purchase it by yourself, you don't have to purchase a property of 200K. I
Okay.
mean, depending on where you are located, houses in southeast of England are very, very expensive. I
Yeah.
mean, places like London and its environs, so it's expensive.
Mm.
So if you live somewhere like Manchester, I'm
Yeah.
pretty sure you'll be able to get a decent home, a decent house. If you live in Coventry, I am very sure of that because I've done mortgages for people. Yeah, I've helped people with their property when it comes to purchasing a property of 100K, 120K, 150K in
Yeah.
yeah, in Northampton, in Nottingham, those areas, it's not too expensive. And if they are skilled workers like the NHS, they also get incentives as well,
Yeah.
especially if they have permanent contract with the NHS. So they get a lot of benefits that might come with the process of, purchasing property. Because what the government wants to do in the UK is to keep as much as possible nurses, care workers, medical workers in the UK, because some people are, moving out of the UK because of not being able to access mortgages and so on. So they brought out that incentives recently. Yeah.
So sorry, I'm taking too much time on this
Oh,
particular
go ahead.
question because I have interest in it. So because you talked about, so I used NHS as a case study because obviously I know their pay grade and how it works,
Yeah.
and I've been there before, but I'm not there. So what I'm saying is this: for non-NHS workers, do they still get considerations, especially if you're not married, or probably do not have a partner to team up finances with to get apply for or get a home or get a house or so as the case may be. So if you want to do it on your own and you probably do not probably you're doing it on your own and you do not have a partner and then probably you're a care worker or support worker as the case may be, but you're not in NHS at the point. So do you still have access to considerations as a care worker even though you're not in the NHS? And I don't know,
Okay.
I'm just curious to know.
Yeah. Thank you for that question. Is it Joma? Am I correct?
Yeah, yeah, right, correct.
Thank you for that question. Again, every application is determined by the personal circumstance of the client.
Okay.
And lenders, as much as possible, want to encourage people to be homeowners, especially first-time buyers. And for non-NHS for non-NHS as workers, they may not qualify for any form of discounts. However,
Okay.
it also depends on the lender we are using. So what we do is to search the whole of the market and see which lender will be suitable for your particular circumstance. And
Okay.
that will determine whether or not we should go ahead. Then again, uh, importantly, you need to have had a savings.
Right.
Owning a property is not 1 or 2 years thing, especially people that just moved, relocated from Nigeria to the UK. You have to settle down and you have to, except you have financial support from family or friends or your spouse or anyone else can give you that financial support, then you can use that money as part of the deposit. I've had clients that they moved in within 3 years, they bought a house. Um, they had 10% deposit, which was about 12K. The wife is working, the husband is working, they saved, they couldn't even get the money, because they live far away. They don't live in, southeast of England where houses are expensive. They live not Durham before Newcastle, and they bought a house, and it was way cheaper. And they didn't even have the deposit complete. They had to speak to family member who wrote that they were being gifted part of the deposit, and today they are homeowners. So I mean, no matter how little it is, for me, it's important that you get into the ladder. Any way
Okay.
it is, get into the
Oh,
ladder. That's why I encourage people to buy a house. If you can have a job in Bristol, you have a job in Durham, you have a job in Manchester, anywhere that you know that the job is permanent, you can go from there and you can buy a house, that you can afford, really. You know, I've processed a mortgage for a client in Bolton that they bought a house for 80K. It's not as big as the house you will see in somewhere in London. Where, if they want to mention people who are homeowners, they'll be part of it. You know what I mean? So you get into the ladder. When you own a property, when the lenders are looking at you, you are a homeowner. And when you want to remortgage, you have equity sitting, waiting for you. We call it lazy fund available for you that you can
Okay.
take out and get the house of your dream, get the house of your
Okay.
choice, really.
Okay. Cool.
Yeah.
Makes sense. Thank you
Yeah.
so much. Thanks. Thank you. I
Wow,
appreciate
thank you for
it.
that is insightful explanation. Thank you very much. I think this would I can see that I saw Osa has their hands up. I'm not sure if it's a man or okay. The hand is down now. Probably you've already answered the
Question,
question. Yes. Oh, it's back up. But anyways, let me just quickly ask. How long must I be in the UK to be able to access mortgage?
Again,
So
okay.
go ahead, sir.
Again, another good question. There's no time frame as regards how long you have been in the UK to get a property. The only thing you need to demonstrate is financial history. Financial history. If you are buying a property, as a cash buy, you can buy a property straight away. As you are moving from Nigeria, you buy a property the next day if you have your cash. What they need to do is just to check the source of that income. So they will do a money laundering check to be sure that it's not money gotten from politicians, for example, or money gotten from drugs. You know what I mean?
Yeah.
Money that is not clean, so to say. So you can come with cash from Nigeria and buy a cash straight away, and you own a property. Then, if you want to get a property on mortgage, you should have built a financial record. What do I mean? You should have a bank account, maybe have a credit card, and be employed. You've earned salary for at least minimum of 6 months. Then the lenders will not see that you are in the system because they use the credit report system to understand your credit capacity and be able to understand how and why they should borrow you. That is why at this point in time, I will recommend going forward, if you need to have or you need to purchase a property in the next 6 months or 1 year, two things you need to do. One is to get a credit card. Go online, you can get a credit card. There are a lot of credit cards. There's Aqua, there is Capital One, there's MBNA. There are a lot of credit cards you can get that will help build your credit. Again, I also assist people in the process of applying for credit cards. So if you need any help with regards to how and what information you need to put in applying for a credit card so that you're not rejected, feel free to contact me. My number is in the chat. And of course, Deborah has always displayed my number. Then secondly, you need to have a life insurance in place because once a mortgage process starts, an application starts, and they see that part of the document you've submitted is a life policy to a benefit amount, it gives confidence to the lender that, oh, okay, should anything happen, at least this mortgage will be paid off. Just look at it this way. Let's assume you're the one borrowing somebody's money. You're borrowing money to somebody, yeah? They don't have collateral. Will you be comfortable to want to borrow them that money?
No.
You won't be comfortable. So the banks want to be comfortable. The lenders want to be comfortable that there's something in place at least should anything go wrong. We pray nothing should happen, but the way the system work, they consider collateral largely. So it's important to put those things into consideration.
Okay, thank you very much. You know why I asked? Because I have a friend that is trying to get on the ladder, like you said, and the challenge for him, I think, I'm not sure if that's sorted now, but the challenge is that a couple of lenders are not comfortable with his visa status. He's on
Okay.
a skilled visa, so it's like a lot of lenders um would not want to lend to someone that is on a skilled visa and is not up to 3 years, I think. And that's why I asked that question. So it's like he has a limited um lender, a limited list of lenders to choose from. Do you understand?
I can tell you this for free. Yeah. Quote me anyway. I can tell you this for free. In fact, I'm supposed to be charging for this information. I can tell you this particular one for free. That if you have 1 month to the expiration of your visa, you can get a mortgage for free. I can tell you, and I've just told you now. If you have 1 month to the expiration of your visa, you can get a mortgage. Except it's a visitor's visa,
Mm.
you can get a mortgage. So I don't know who is helping him. Um, if you're on a skilled visa, you are overqualified to purchase a property in the UK. If you are on a post-study visa, you are overqualified to purchase a property in the UK. With
Wow.
the PW, is it PSWs, post-study work? Yeah.
Yeah,
As far as you are
post-study work
working, you
visa.
can
Yeah.
purchase a property in the UK. If you're on a skilled visa, as far as you are employed, you have proof of your employment, you can purchase a property in the UK. And again, if it's 1 month that is left, with the expiration of that your visa, you can still purchase a property in UK as far as you can demonstrate that you're going to extend that visa rounds out. Yeah.
Okay, thank you very much. I saw, sir. Sorry, we're just going to come to you. But before that, I just want to ask, you've mentioned a couple of credit cards. So I just want to ask, because I know that Monzo also give the Monzo Flex card where you can they give you a certain limit and then you can use it as you want. And I think recently they also introduced the fact that you can also take the cash from your credit card out into your main account and you'll be able to use that as well. But what I want to ask is they have payment plans. There's 3 months payment plan where you don't even pay interest if you've picked that you're going to pay 3 installmentals, so they don't charge you interest. So would that help my credit score? I'm just curious. Would
Okay.
that, because here now it's like I'm not servicing any loan because within 3 months I'm paying back, and that's their own policy. If I choose to pay back within three installments, I don't pay interest.
Okay.
So yeah,
That
so would this in any way affect my credit score? As in, would it help my credit score, or my credit score will just be there because I'm not paying interest or I'm not servicing any loan? You understand what I mean?
the answer is it will not benefit you in the sense that because you are taking advantage of the benefit that you get from that credit card by paying the credit card what you are due to be paid because there's no interest. But in your credit file, it's going to show that you're still owing that credit card. However, you can continue to do that, but it will take a bit longer for your credit score to go up.
Hmm.
Unlike when you use it at the end of this month, the other month you pay completely. So that will show that your credit rating has improved. Take for example now, if you have that credit card and you owe £500 with that credit card, yeah, and you pay minimum payment of £50, the next month your credits will remain the same. The second month your credit will remain the same because you're paying only £50 minimum payment. The third month it will be the same, the fourth month will be the same. But if you are owing the £500 on the credit card and you pay it completely, just wait for your next credit report to generate. You will see that your credit report will go up.
Okay.
When it goes up, it will now boost your credit score. And when you are applying for any other credits or any other financial tools, then you can now have opportunity of getting more as well.
Hmm.
So really, you have a product that is benefiting you on the basis that you don't pay any interest because of the fact that it's interest free.
Yeah.
Again, the credit report will not move um,
From where it is.
tremendously,
Hmm.
yeah, as the way you want it,
Yeah, thank you very much. I saw, sir, please, I beg your pardon. Forgive me, please. It's just because we're still on the matter. I have a question. And the question is, please, how do I check my credit history?
Okay, it's simple. I'll answer that straightforward. You can use the Xperia to check your credit score, but you have to register and pay for that. I think it's £14 every month. Or you can use Credit Karma. Let me drop it in the platform. Credit Karma. That is free. Oh, someone already dropped it. Okay.
Oh, okay, fantastic.
Credit Karma, you can register on Credit Karma and you'll be able to see your credit reports um, every month. And that is
Okay.
free. Yeah.
Okay, thank you very much.
Mm.
Okay, thank you very, very much. I saw, sir, you have the floor now. I hope your hand is not paining you yet, too. Sorry.
Thank you. Thank you very much, Deborah. Sincere gratitude to the facilitator for today's section, Mr. Fiamorogua. It has been an insightful, in-depth financial deep dive, and I've gained so much from this section thus far. My question is divided into three folds. Number one is, what is the ideal credit score? Because your explanation some few minutes ago gave me a different understanding to this credit score thing and repaying whatever credit that is borrowed and all that. So I want to know, number one, what is the ideal credit score, given that there are quite a number of factors that contributes to your credit rating, including being your name being on the electoral register, your consistency in your address, and some other things that I can't remember just now. And also how long you've opened a bank account, the frequency of opening bank account. I know all that's a part of the criteria for maintaining stability in terms of credit score. But I want to know, what is the ideal credit score? Number two, you did mention refinancing of mortgage, and so much emphasis was laid on existing property, buying it, renovating, and all that. So I want to know if this model, as explained, is applicable to new builds, where you don't have to renovate and all that. Does all those extra value accrue on, new build properties such that you can refinance again the following year and increase your investment portfolio? Number three, finally, is there any visa that is exclusive to this mortgage model? Because I know there are some restrictions that comes with innovators visa, and I've had a few friends who are in the UK, they don't work, they came for study. I mean, they are well to do, but they are unable to buy, mortgage, for whatever reason. So I want to know, is there any exclusivity? Is there any visa category that is excluded from, applying for mortgage? Bear in mind that they have a large chunk of, the money, but not in full, not the complete money. So I don't know if they are even eligible to approach a finance institution to. Or a lender. So thank you very much. Those are my questions. Thank you.
All right, thank you very much. Very big and bold questions. I'm going to start first with the credit score you talked about. As an institution, we use Experian as the basis, or Equifax rather, as the basis of the criteria we use in measuring anyone's credit score. So to answer your question straight away, for the Experian, you need to have at least 700 in your score. Sometimes people have even 800 or more, but they have default. So it's not just the score, as it were, that we put into consideration. It's also the other elements in your credit file. For example, if you've got CCJ and your score is 750, we have to consider that as well. If you've got a default and your score is 780, we have to consider that as well, because most lenders wouldn't want to offer you a mortgage if you had just, had a CCJ that is less than 2 years, or, a default that is less than 3 years. On top of my head, I know that if you've got a default that is 3 years below, Barclays, Accord Mortgages, Precise Mortgages, Yorkshire could consider you for a mortgage. So it's important to understand that it's not just the score itself, it's other elements that are found in your credit file. So we have to also ensure that we look at the credit score in details, not just the report itself. I mean, it's important we look at the report in details, not just the score itself. Again, as I said, every person's personal circumstance is different, so we personalize our service to ensure that whatever you're looking for is suitable for you and your family. And again, the lender would also consider, you mentioned how long you've had your bank account, if you're registered with the what do you call it, electoral roll. These are many more very important parts that would help you get a mortgage easily. Then in terms of new builds and in terms of the refinancing, to a very large extent, once a property is a new build and you've purchased it, it doesn't give value straight away, unfortunately, because you would not be able to immediately refinance it, because the value you've purchased that property for might remain the same for a period of time. So where you actually get value is old builds, especially when you are buying below the market value. Once you purchase a property below the market value, if you have the skills, the capacity to be able to negotiate and get a deal for a property, and you refurbish that property and you now refinance it, then you get a good deal in terms of getting money out of that property. So I hope that clarifies that. A lot of people say they don't like new build because of the long process and time it takes for it to, give you value. But old build, once it's renovated and you go back to the lender, they come and check it and revalue it. You can then refinance it and get your money back straight away. So as a matter of policy, some individual who are into real estate investment do not invest in new builds at all. But personally, I love new builds. The smell, you want to live long and enjoy your life. I mean, especially if you want to live in a new build, then that's fine. But if you're going to go into SPV, getting property as a business or in a limited company, then of course, buying the old property is more than absolutely the best direction to go. Then for the visa aspects with regards to purchasing a property, as I said earlier, I'm not an immigration officer, but to a very large extent, I can tell you for free that you can get a mortgage with any kind of visa, even though it's 1 month left, you can still purchase a visa, except the visa is except the visa is a visitor's visa, then you can't. The only way you can use a visitor visa to get the property is when you are doing cash buy. Then you will need to show that you've got the money, and they go through money laundering check and ensure that the money is clean and it's not dirty money. And of course, you can go ahead to purchase the property. Again, a lot of people may not tell you in details their personal circumstance, and there are so many factors, lenders also look at. Maybe they've not been in the country for too long, even though they have a huge deposit. Maybe they are not registered with the electoral roll. Maybe they are not even properly employed, and maybe they've not paid enough taxes. if they are, employed or self-employed. So again, it's something, when it comes to mortgage, again, it's a personalized service. So we need to sit down and look at it in details. Why are you not being accepted? Why are they refusing you? What is the underlying factor that this is not going well for you? So we'll look at that in details, and we'll be able to exactly understand why you are not offered a mortgage. Then again, every lender, like high street lender and non-high street lender, have certain criterias. I know a lender in the market that can offer you a mortgage without your immigration status. I can tell you that for free. It just came into my head now. A lender, they are not, they will tell you they're not immigration as far as you are working. For you to show that you are employed or you're self-employed, that means you have the right to be in the UK. You need to show your ID. You just need to show your ID. It could be driver's license or passport. So they would look at your pay slip, they would look at your bank statements, then they will take a decision on whether they should offer you a mortgage or not. So again, we need to consider that individual's personal circumstance. Something might not be clear that you may not be aware. Trust me, you may not be aware, but if we sit and have, a meeting where we look at holistically their circumstance, we'll be able to find out what is going on. They have the right to be in the country. They have the rights. You mentioned something about innovator visa. For an innovator visa, they can buy a house because they are like entrepreneur. So if you're an entrepreneur, you want to own a property in the UK, you should be able to own a property in the UK, except the person wants to use that property as a means of extending their stay in the UK, which is not possible. No matter how many houses you have in the UK, you can't use the property as a means to regularize your stay while in the UK. No, you can't. So I don't know if that answers the question.
100%. Thank you very much, sir.
All right. So we carry on, Madam.
Yes, thank you. I think I think that has even okay, maybe not. It says, please, sir, can you also touch on zero deposits? I understand
Okay.
some lenders offer this currently. Yeah.
Okay, zero deposit. To be honest with you, I don't touch zero deposits because it's quite hard to find lenders. I understand there are lenders, but in the past, I mean, a couple of years ago, people buy properties when the economy was really, really booming. People buy properties on 0% deposit. But in recent time, don't, I've not had any cost to do or to deal with anyone that's looking forward to 0% deposit. So I would not encourage that. I mean, because I don't touch it because the hustle about it is quite difficult. Then again, it's always better to have a deposit because you are going to be paying less on your repayment. You're going to also be looking at building a portfolio quicker, and you also be looking at um, ensuring that you have a valued property that would rise very quickly in the market. So, I mean, I don't personally touch 0% deposit here.
Wow, thank you very much. I mean, this section has been really, really beneficial to everyone. And from some of the testimonies that we've gotten from people that have spoken, it's actually I'm actually happy that I attended this section, and I'm happy that the NSSPF has put together this session. And we are also so grateful for your presence. Thank you so much. You mentioned earlier that maybe you should even charge, like you are supposed to charge for something, but you are here and you're not charging us just because of, you know, the love that you have towards us. You want us to also to also do well, do good in the UK, to also have the financial security. So and for that, we're so grateful. Thank you very much. I've learned so much. I mean, I didn't know about Credit Karma before. I was using Experian, and they will be telling me, in fact, to even view some things, you have to subscribe. You have to subscribe. How much am I earning that I'm subscribing £17? So this little things, they are the things that add up, and for that, I'm so grateful, and I'm happy that I've attended this section, and I'm sure that that is also the testimonies of a lot of people on this call. Just a recap to say that thank you everyone for joining this section. We'll be having the legal aspects of property business next month, so please endeavor to join us. This particular section has been mind-blowing, and I can promise you that that section too would be absolutely great. Please join us. Also to say that we want to be having regular Friday check-ins. So if you are someone here, you just need someone to talk to, or there's something on your mind, we understand that it is okay to just want to talk to people sometime. We cannot do it all. So if you just want someone to check in on you and just talk, you may not necessarily even know the person, just feel free to talk. We are creating that space where, whether you're a student or you're not a student, you can just talk to someone about any issue, anything on your mind, and you'll be amazed at the resources that you would even get. It might be during the process of that check-in, the person may just be the person that you even need to solve a particular issue, or know someone that can actually solve that issue for you. So we want to we're creating that check-in space, and for anyone that wants to be part of it, please do let me know. I'll drop my email on the chat for everyone now. Please, you can send me an email. If you don't want to send me an email, you can actually contact us. Bear with. I just want to go to the slide where we have our details. You can contact the NSSPF on info@NSSPF uk.org. NSSPF is the Nigerian Student Society Presidential Forum, and the aim is to encourage collaborations between one another through events, ideas, just like right now. We've heard that we can actually collaborate, we can come together, own property. That is the main of NSSPF, to build a formidable force in supporting Nigerians in settling down in the UK, Nigerians in prospering in the UK. And myself that you're speaking with, I came weeks ago, I came together with some people, and we're in the process of actually starting an organization. And one of the things that we've also looked into doing is the real estate part. So I was absolutely happy that this section came to being. For as many that want to be part of that business as well, you have my email. You can contact me, and I'll be happy to explain what it is to you. It is very, very important that we put ourselves on the map. We put ourselves on the map, and I'm happy with our generation. We are not the generation of Nigerians that have been abroad for years and basically have nothing to show for it. I'm happy that we're a generation that would not just take no for an answer. We're a generation that is pushing and pushing the force, changing the narratives. So happy to discuss the business with anyone that has interest. Happy you have if his contacts, let me just, yeah, it's on the screen. Hold on. It's on the screen. You can always contact Ife. As soon as you mention NSSPF, the section with Deborah, I'm sure Ife will not forget. Just say the section with Deborah. He knows that, oh, this is where you got his contacts from, and I can assure you that he's going to attend to you absolutely well. He's going to look at all that he can to be able to help you. For people that were not here when he mentioned, if his company, Our Financial, is actually recruiting. And so if you are someone that you've been looking to get into the corporate world in the UK, this is a very great opportunity. He mentioned training, and training is very important. He mentioned that the organization will train before you even start. So, and that's a very, very, very important part of any job that you're starting. They have to do some trainings for you. So if you are in that position, you are looking for a job, this is an opportunity. Contact Efe. His email address is on the screen. His phone number is on the screen. He's dropped it on the chat as well, but just in case you can't see the one on the chat, is displayed on the screen right now. You can contact Efe and just tell him that, oh, it's from the section with Efe, the NSSPF section with Deborah. If that's just what you can remember, and I'm very, very sure it's going to put you through as to what to do, how to apply, and how to move on. I want to use this opportunity on behalf of the president of the NSSPF, Ambassador Andrew, and his executives. I want to say a very big thank you very much for your time. We do not take it for granted. We know that time is money in this country. And the fact that you are here, a lot of us started with us from the beginning and are still here. We want to thank you very much for coming. Thank you for the very, very provoking questions. And if you thank you for the insightful responses to those questions.
Thank you very much, Deborah. Before we go, let me just quickly say, I want to appreciate everyone for taking time to come to this meeting. It's absolutely amazing. And I'm sure we have benefited one or two things. And I recorded 19 people, but we have 16 at the moment. I want to thank Chris, Isosa, Danny, Ijoma. There's one iPhone. I don't know who that is. Another iPhone. Then Kume, thank you so much for taking time. Lola, thank you for coming. Adetayo, thank you. Owotomo, sorry if I mutilate your name. Thank you. Richard, thank you for coming. Stephen, thank you for coming. Taiwo, John, thank you for coming, and I appreciate everyone. Just to also let us know, the president of NSSPF, Mr. Andrew, invited me to this platform, and Deborah has already mentioned it. We are setting up an SPV, a limited company to use to purchase properties where people can come together and purchase property and invest, so that those of us who are paying someone else's mortgage will be finding a way to start going out of that and using their money to invest for themselves and the future as well. So again, if you need any assistance, any help, any information with regards to how to get a mortgage, how to own a property in the UK as a residential owner or SPV or limited company, how to sign on for a life or income protection or critical illness cover, and how to get a private medical insurance, home insurance, business and commercial insurance, as the case may be, do not hesitate to contact me. I'll be more than happy to support. As again, I'm in your generation. When you say your generation that just came, it's mine. I'm in your generation. I want us all to pull our resources together and grow in the UK. Although I'm an investor myself, I have properties, but I didn't want to mention that not to intimidate anyone at all, because I know that most people here either they don't own a property yet, or they are in the process of owning a property. So I am more than happy to the mistake I made, I'm more than happy to tell you so that you don't make that mistake. So it's going to be smooth for you from the beginning to the end. And the good news is that I work in the financial services industry. So a financial advisor. So I will be able to tell you exactly how to go about it. They always say experience is the best teacher, which of course no one can argue. So again, thank you so, so much for your time, and God bless you all. And I wish you all a lovely, lovely weekend ahead, and stay blessed. Thank you so much, Deborah.
Yeah. Thank you everyone for coming. For everyone that dropped their email addresses, I'll be sending the link to this recording. If you would like to have a link to the recording and you've not dropped your email, you can drop it now, or you can just send me an email. I have my email in the chat box, but I'm just going to paste it again for people that do not have it. Here's my email. You can send me that email. But if you would like me to send to you, I would be sending to you. Thank you very much. Thank you so much for coming. And we've come to the end. Enjoy the rest of your evening. Thank you.
No, you don't. Hold on before you go. Does anybody have any comments, any contribution, anything to say? I mean, it could be a comment, it could be a question again, anything at all. It could be about the presentation, anything. It could be about Deborah. Okay, I think they've all gone.
Yeah.
Okay, they're still here. 17. Okay.
Yeah. Thank you.
Okay, because I
Can
don't
you
want
hear
it to look like it's supposed to be.
Yes. We can hear you, Stephen. Hi.
Oh, hi. I just want to say thank you for this presentation. It's an eye-opening presentation, brilliant one. But the only thing, I didn't get to see all the slides, but I think from the ones that I saw, it inspires one to really have better understanding to, especially mortgages. You spoke a lot about that, and income protection. I think every one of us needs it, because in the UK, if you're not protected, you just be on your own. But thank you so much. I appreciate this. What we got was really good. So my feedback would be an excellent one. Thank you for this opportunity too, especially the investment part. I would be interested in that.
Wow.
Thank you.
Thank you very much. Thank you for that amazing feedback. Thank you. And it's just good, it's when you put together an event like this, it's just good to know that you're making an impact and people are getting something from it. So thank you so much for that feedback, and for everyone in the comment section as well. Thank you so much. Have a lovely evening then. Bye.
Bye, everyone. Bye-bye.
Bye.
Bye.
Mr. Chris.